and then record. All right, we're live.
Awesome. All right, I'll get us started here. Hi, everyone. My name is Katie Makeumson. I'm your Executive Director of Young Professionals of Martin County. We want to welcome you to our second series. We are calling Networking from Home. The title of this series is Buying a House, and it is sponsored by Arrow Title Services. Today we have Lucy McGuire. She is our Vice President of Young Professionals, and she is also our presenting sponsor. Lucy, will you take a little moment to tell us a little bit about yourself and Arrow Title Services?
Absolutely. Thank you. Hi, everyone. My name is Lucy McGuire. If you don't already know who I am, Katie just mentioned that I am the Vice President of Young Professionals this year, but for my job, I am the Business Development Officer of Arrow Title Services. And a lot of people are familiar with the realtor and the lender when it comes to the process of buying a home, but a lot of people don't know that we are the third piece of that puzzle, where we're the title company that is handling the closing and getting you guys to the closing table. So if you guys don't already follow us on social media, we do quite a bit on social media to help engage and educate people on what we do and what's going on with the real estate market and everything. We essentially just want to get you guys to the closing table as quickly and as seamlessly as possible. We do a lot with our YouTube channel as well, in giving you guys information about title insurance, which is a whole nother thing that people don't even know about. But it's always, we always try to make it fun and make title insurance fun, as fun as that can be. We also host weekly live videos about real estate in the market update Mondays, top tips for buyers, and so much more than that. So it's just our goal to educate as many people as we can. So that's what I do for Arrow Title Services. And I'm excited to have this conversation today about buying a home. I just bought my own first home, and it's a crazy process, but we're going to break it down simple for you guys. So I'm excited. So thanks, Katie.
Awesome. Thank you, Lucy, so much. And we also appreciate Arrow Title Services for being our presenting sponsor tonight. We do also have two other guest speakers with us tonight. First is Julian Maiucci. He's one of our members of Young Professionals. He is a realtor with Berkshire Hathaway. He's going to be giving some tips. And he's also brought along John Pinkley with Compass Mortgage, he's a mortgage broker, and he's going to be giving us some tips. You'll have an opportunity to ask some questions and hear some information and stuff from them. But first, I'm going to go through all of our YP business that we get to do. So please don't mind me. I'm going to be reading from the screen so that I make sure I don't miss anyone. First, we want to acknowledge our board members. Our president is Courtney Ninetemp with Tykes and Teens. Our vice president is Lucy McGuire with Arrow Title Services. Our treasurer is Caitlin Hartley. I forgot the name of her new position. I apologize. It's up in tradition. I'm sorry, Caitlin. Our secretary is Dale Rockefeller with Culvers of Stewart and Jensen Beach. Our at-large board members are Philip DeBard with Philip DeBard Personal Injury Attorney, Jackie Lyle with the Stewart Sound Animal Hospital, Wendy Conrad with Your Happy Workplace, Josh Heller with the law firm of Hoskos, Turkins, Lloyd & Lloyd, and Jeff Allman with NAIC South Coast. And as we do with all of our events, we would like to recognize our annual sponsors. Our gold sponsors are 901 Hub, Clear SEM Solutions, Atlas Event Rental, The Roasted Record, The Kearns Agency, Team Parks. And our silver sponsors are the Children's Museum of the Treasure Coast, Culvers of Stewart and Jensen Beach, Brightway Insurance, the Vincent Zanfini Family Agency, Tykes and Teens, Helping People Succeed. And the last thing is our business members, the CRI, CPA and Advisors, Gordon and Partners, U.S. Coding Specialists, Jensen Beach Golf Club, Stewart Magazine, Sailfish Insurance Group, Hometown Cleaners, Zeke Surf, Skate, and Paddle and Sports, the Robert Nichols Insurance Group, the UPS store at Canner Highway in Hobe Sound, and Tribe Intensive. All right, that was a lot. So first thing I want to do is pass the mic over to Miss Lucy. If you would go in a little bit more in depth about how we use title services and some tips for buying a home. Thank you.
Absolutely. So I had put together a little presentation thing, but I'm just gonna go willy-nilly right at it. So first and foremost, who's excited to talk about title insurance? Woo-hoo, this is where you guys get excited. Yeah, I know, it's super exciting. Well, I know the nitty-gritty details of it all can be boring, but let me just start essentially with what we do as a title company and why it's important. So we are the one who gathers all of the information from both realtors, the lender, surveyor, HOA communities, all of this information, we're gathering it during the closing process to make sure that we put everything together for you to sign at that table when you get to closing day. Now, we also give you guys title insurance when you're going through that closing, on the property that you're buying. Now, your next question might be, well, what is title insurance? So title insurance is the one thing that actually protects you in your home ownership of your property that you're purchasing. Now, it is the one thing that insures you against anything that's happened in the past, whereas most insurances protect you from things that are going to happen in the future. And I know people freak out when they hear the word insurance and they're like, like they don't want to hear about insurance, but it's completely different than other insurances. And when you are going through the process, your lender is going to require that you get a lender's policy, and then the policy that you get for yourself is an owner's policy. So there's two different types of policies that you're getting there. So properties have been sold so many times over and over and over again. And we are humans, right? So mistakes can happen. And if those mistakes happen, you're pretty much getting protected from anybody's mistake in the past, from human error, which is a good thing. So we protect those mistakes. I always like to give an example for people so that it kind of puts it into perspective as to kind of why it's so important and just kind of wraps it all together for you. So that example being that, let's say 20 years ago, there's a mother and her son, and she wants to give her son the property. She signs over the deed. They have two witnesses, but they don't get it notarized. Technically, that deed is invalid, but he goes on, they go on, they think that they have done this properly, and he moves forward. Let's move forward now 20 years, we're in current day, and the son thinks he owns this property. He goes about trying to sell it and realizes that when we do the title search that, oh, he actually doesn't own this property. His mother does. Well, his mother has passed away. So what happens then? He has 4 other siblings. That ownership, because she was the sole owner, would then go and split off to all of her siblings, all of her heirs. So now there's 5 owners of this property, and he would have to get permission from every single person to give him that property, which when it gets into family isn't always so easy. And especially if, like, let's say one of those brothers was in jail and another was passed away, and then that brother who's passed away, it goes then transfers to his heirs. So now there's 7 different points of contact, and you have to get permission from every single person to say, yes, he is the one who's supposed to have the property. And that would have had to come all out of pocket for him because they did not get title insurance and they just switched the deed over and thought, oh yeah, it's fine, it's good. But human error, things get missed. And if it had been done through a title company, it most likely wouldn't have happened, where it wouldn't have been notarized. It just wouldn't have. And if it did, the title company would have taken responsibility for that. You would have filed a claim and they would have taken care of all of those issues to make sure that the proper ownership got to the person who was supposed to. So that's just a little bit of an example that I like to give to people to kind of put it into perspective. A lot of times people also ask what the cost of title insurance is. Now, that is a completely state regulated cost when it comes right down to it. And a lot of times people think that they can shop title insurance, and you can't. Now, there are other costs like closing fees and such like that. The lenders have their own fees and such that all kind of go into it to create your full closing costs. But the title insurance itself is a state regulated cost and is completely depicted on the price of the home that you're purchasing. So we have an app on our website, www.aerotitelesvcs.com. You guys can go there, get an instant quote. It takes 2 seconds. You put in the property address and you get an instant quote to tell you what those costs are going to be broken down if you were using us. And so that's one of those things that gives people like an idea of what those costs are going to be. They're not completely accurate because it could depend on who you're utilizing, et cetera, et cetera. And just another few little tips. When it actually gets to the title company, a lot of times people are confused where we get into the process. It's when a contract is formulated between two realtors, buyer and seller, and they come to an agreement and they say, okay, yes, this person is getting this home. You have a fully executed contract. That contract then gets sent to a title company, and that title company then will work on pulling the files for that and getting things prepared as we wait for the inspection period, et cetera, et cetera. There's so many things in between that I'm going to let the realtor and lender get into right after me. But that's kind of when we get that contract right at the beginning, and you want to make sure you have a good team behind you who's going to communicate with you through this process, because it's a very complicated, there's so many moving parts, and you want to make sure that all of those moving parts are communicating with you so that you're not in the dark. So we just do our best to try and communicate, and we order the title search, the lien search, estoppels, all of the things to make sure that the property is free and clear for you to own, that there are no title defects or anything that's going to hold you back and creep up underneath your bed at the end of the night. So that's kind of where we are in the process. And last tip, blah, 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 that I'll put in there is that title insurance is actually a negotiable aspect in the process. So sometimes buyer pays for it, sometimes seller pays for it. But in our current market right now, things are crazy. It is a very hot market, which I'm sure the other two professionals who are on here are going to get into. And usually you see buyer paying for title insurance right now to make their offer competitive, and the buyer paying for it, I mean, it's a negotiable factor, but it is benefiting you as a buyer to buy that title insurance. So that's what we do, and I'm excited to hear what the other professionals on here have to say, but hopefully that starts the conversation off well and you guys are still excited.
Awesome. Thank you so much, Lucy. That was a great analogy too. We are going to have questions at the end of all of this, speakers. So if you're watching, want to write down your questions, let me know. Next, we have Julian Maiucci. Julian is a realtor with Berkshire Hathaway. He is also one of our young professional members. He previously sat on our board, and he's here to give us some tips. So thanks, Julian. Oh, you're on mute. Julian, you're on mute. There you are.
I was going to forget to do that. So thanks for having me. Crazy market out there. Lots of stuff changing every week. Lots of demand, very low inventory. But people are still buying and selling every day. So don't get discouraged. Lucy just bought a house. It can definitely still happen. Got deals with John under contract right now, so we're making it happen. I'm going to touch on the market. I'm going to touch briefly on the pre-approval, which is John's job right there, and then the process. So the process really is going to involve the home search, the offer, then the time you're under contract, which will be the inspection period, title, loan process, and then finally the closing. So I've been doing real estate 12 years in Martin County, born and raised in Jensen Beach. So I've been seeing the housing market a lot, even longer than that. My dad's a realtor, so it's kind of been a tableside conversation since I was a kid. And we're definitely seeing the highest demand and the lowest inventory in the last 12 years or more. Prices have been increasing almost on a weekly basis, definitely monthly. No one knows if it's going to end, so sitting by the sidelines might not be a good idea. I know people who were waiting a year or two ago saying, oh, the prices are kind of high, I'm just going to wait. So the main thing is find the house you want, make sure it's in the location you want, and work with a good lender, a good title company, get a fixed rate mortgage, low interest rate, and I think you'll be good. We're seeing a lot of people from up north, big cities, relocating to South Florida. And then on the contrary, a lot of people from South Florida, as it's getting overpopulated, are coming up. So it's almost like a perfect storm where we have people from up north coming down, people from South Florida coming up, and Martin County is literally the sweet spot. I tell people we're the last small seaside town in South Florida. So when people get on the internet out of state, look up South Florida, you start in the Keys, Miami, Fort Lauderdale, Palm Beach, all overbuilt, overcrowded. The Keys are tough to find jobs and where we like to vacation, but people from Miami and West Palm are definitely coming up, had a few sales in the past couple months. So we're just going to see where this goes. Really, the first step is the pre-approval. Until you have a pre-approval and you're pre-qualified, I will not show you any homes, because to me, that says you're not serious and you're not eligible. The number one thing I get is, oh, I'll be good. Oh, I have good credit. Oh, I have a good job. Then I say, well, spend the 15, 20 minutes with John on the phone and get your pre-approval. That shows me you're serious. It shows me you're qualified. And then we can start looking at homes. Until then, just keep playing around on Zillow, realtor.com like everybody else does. A lot of people do it for fun, even though they're not looking. But that's really the first step, is getting the pre-approval. As far as the process, once you got the pre-approval, we'll meet. We'll see where your purchase limits are as far as your mortgage or what you can qualify, where you're comfortable at. And then we'll determine your criteria, where you want to live. Do you have to have a garage? Do you have to have a pool? And then we can start looking at homes. Right now, there's not very many out there. So you literally have to jump and run and go see the house as soon as possible and get your offer in. Once you make the offer, you wait, usually a day or two, sometimes a little longer in this market right now, because the sellers want to give everyone an opportunity to see the house. If the seller accepts our offer, at that point, your initial deposit is due. I'm going to use a $250,000 house as an example. That's pretty much the starting point for a single family home. Even 2-bedroom, 1-bath homes in some areas, that's pretty much the starting price. So at $250,000, depending on the loan you're doing, your initial deposit can be anywhere between $1,000 and $10,000. That will go towards your closing costs. So it's money that you're going to be spending anyways, that you put up in good faith. And if you cancel during the inspection period, you get that money back 100%. So once we go under contract, you're looking at about a 7 to 15 day inspection period. 7 to 10 days seems to be the normal now. During that 7 to 10 days, you'll do your inspections, make sure the house is good. I highly recommend to get that done as soon as possible so we can get reports out to the homeowner's insurance, make sure the homeowner's insurance is in a range that we estimated. Sometimes older homes, frame-built wood stick homes, homes with older roofs, things like that, flood insurance may be required. So you really want to get that all out in the open as soon as possible. Once you get past the inspection period, you're kind of really working with the lender and the title company, getting that process going. I stand by, I keep in touch with everybody, share information. And then the next really big step would be the appraisal. The appraisal is who the bank sends out to make sure the house is worth what you're paying. So if you're under contract for $250,000, the appraiser has to give us the thumbs up that the house is worth $250,000. Other than that, let me check my notes. So Lucy touched on the title. The owner's title policy is negotiable. So as a buyer making an offer, you can ask the seller to pay that, or you can pay that. In a normal market, it's really 50-50. Right now it's competitive. So more and more buyers are offering to pay that. The downside of paying owner's title policy is you have to pay that in cash at closing. It gets added to your closing costs. It's not financeable. If the seller pays it on that $250,000 house, you can say, okay, I'll pay $252,000 and you pay the owner's title policy, and that could save $2,000 in your pocket. But You always want to make sure you work with a good, reputable, preferably local title company like Lucy at Arrow Title Services. I had a house for sale in Port St. Lucie. I had the seller. The buyer offered to pay title. We said, great. Turned out the title company was from Fort Lauderdale. They did a pretty good job, but their closing fee was $850. So that, I see Lucy shaking her head. I mean, the normal around here is $350 to $450, maybe $500. On top of the $850, they wanted to charge my seller $150 on top of that for a mobile notary because she could not drive down to Fort Lauderdale. So using a good local title company, very crucial. Arrow Title Services is very reputable, so I'd highly recommend them. As far as the process, once you work with title and the lender, hopefully it's all smooth sailing. We get the appraisal back good. Closing comes up. We do a pre-closing walkthrough, make sure the house is still in the same condition as the last time that we saw it. The grass has been getting mowed. The pool's not green. There's no roof leaks. The AC still works. The water heater still works. And, you know, hopefully they cleaned it and it's not a mess. But that kind of is what it is. And that can get a little back and forth, but usually everyone's just excited for closing day. So if it needs a quick sweep, someone will step in and help. John Pinkley's, who I've been using for a few years. He's great. He's my first recommendation. I had a buyer use him a couple years ago, and she said, who do you use for your lender? At the time I was using somebody else, and they said, you should talk to John. So John invited me to lunch, and we went to lunch. We had a good chat. About a week or two went by, and he followed up with me. I was like, okay, this guy's, you know, on it. So we had another chat, and I said, okay, I think I may send you somebody. A few more weeks went by. He followed up with me again. And that's what you want with a lender, because when you send him somebody that's not ready yet, John's expertise is he will coach them, get them ready, and keep you in the loop. He's a master at that. That's what he does best, besides providing great service. Hardly ever had any issues with him, and great feedback from all my buyers who have used them. So I think that's about it.
Awesome. Thanks, Julian. Those were great tips. I really liked how you explained the whole process through. It was pretty awesome. All right. So that brings us to John Pinkley. He is with Compass Mortgage. He's a mortgage broker, and he's going to give us some more information about the lending side. Thank you, John.
Thanks. All right. My name is John Pinkley. I'm with Compass Mortgage, and I'm going to give you a little bit of information about the types of mortgage companies out there, and then give you some tips to prepare yourself to purchase and to do a lot of the things that go into a little more depth as to what Julian just talked about. But thanks for the kind words, Julian. Appreciate it. So I have been in this mortgage business for a long time. I originally lived in Chicago and was in the mortgage business for about 10 years up there before I moved down here. And that's been about 9 years now since I've been in the Treasure Coast and Palm City specifically. But been a wild ride. There's been a lot of changes in the business and a lot of things that need adjusting constantly with the market. So it's important that when you're trying to buy a home, you really need to be working with professionals all the way around, not only from the mortgage side, but the title company, the real estate agent. It's not only easier on you as a buyer, but it really will help you to be able to actually secure and purchase the home that you're trying to buy. When you make an offer, just for an example, when you make an offer with a seller, they have a choice nowadays. There may be multiple buyers that are submitting offers at the same time. One might be a cash offer, one might be a mortgage company. There might be two or three different mortgage offers that are out there. And if you are going against somebody, you want to be better. You want to win, right? So working with professionals, super important. Local, you want to have somebody local from a mortgage standpoint, from a realtor standpoint. I think that Julian would agree that a lot of offers that come in, if the offer is from an outside source, be it a realtor from Fort Lauderdale has a buyer, or a mortgage company is the buyer's working with a mortgage company that is a national, large institution that's based out of New York, you're probably not going to be viewed as positively as somebody that is having a buyer that might be working with a local lender and a local realtor. So those things are important. They know the lay of the land. They know how to get you to closing, and they have an interest in making this deal come together. A lot of the big companies out there that do mortgages, you're just a number, and they've got a lot of them on the table that they're trying to help. When I work with Julian, I'm working with his buyer he referred me to, but not only am I trying to help the buyer, I'm trying to help Julian so that Julian can help his buyer. Everybody's has the same interest at hand. We all are into this deal together. We're trying to make it happen, and the communication is just much better in that type of respect. So professionals, working with professionals, super important. Like I said, the ultimate goal is to win the house and to win the offer and to move forward and actually close on the deal. So being prepared is super important. I've seen in my neighborhood in the last month, seen some offers that have come. I've seen some houses that have gone on the market 5 o'clock at night, and by 10 o'clock the next morning, there's maybe 7 offers on the home. I mean, and that's no lie. It's wild. Any good property that's out there, when it comes on the market, there's a lot of action. So how are you going to look better? How are you going to stand out? And there's a couple ways you can do that, but getting pre-approved is super important. It's really the first step. A seller will not even consider a buyer that has not been pre-approved, that's not been looked at, that they don't know is capable of closing on this house. Doesn't matter what kind of car you drive, doesn't matter how much money you make, you need to have that pre-approval. And it's just, again, most listing agents probably won't even consider the offer. They'll see the offer and they'll say, where's the pre-approval, is the next thing out of their mouth. So you have to be pre-approved. So as a lender, the things that I would do initially, and I'll talk about this, is we check credit, we check your credit report, make sure that there's no surprises there. There's a lot of things that people, buyers, and even realtors have in their heads about credit reports and credit scores and what can be done and what can't be done. And some of them are myths, some of them are not true. You need to have decent scores. You don't have to have perfect scores. If you have, just for example, if you have a deferred student loan, a lot of people have student loans. With COVID, those loans have been deferred. They're not making payments. Well, as a lender, we know that you will have a payment, so we count that against you. So when I talk to a client and I say, what debts do you have? And they say, well, I only have a car payment. Do you have any student loans? Yeah, but I'm not paying on them. I need to count that. So that's an important factor that goes into trying to determine how much you're qualified for. So as a client, what you think is the way that it should be is not always the way that it is with lending. The world has changed, and it's been different going on every year for the last 10 years. It's been constant changing. So another thing that I would do is review income. And it's very common that people think that they make X amount of dollars and they may truly make that much money. But as a lender, we may not count it that way. So for instance, commission income there's a separate calculation for that. Hourly income, depending on if you're full-time, if you're guaranteed 40 hours, then probably it's hourly times 40 times 52 weeks divided by 12. That would be your monthly income. But if you're part-time, whole different story. We need to take an average of your income over the last 2 years, and you need to have been doing it for the last 2 years, or you can't even count the part-time income. So bottom line, a lot of rules and regulations and a lot of things that you need somebody to look at to say, okay, here's what you can be approved for based on the guidelines that are out there today. Down payment, another area that would be discussed would be how much you plan on putting down, how much you have available to put down. And another area of confusion is, sometimes people say, I want to put down 10%, $250,000 house, 10% is 25,000. How much do you have? And they'll say, well, I have 25,000. Well, we have closing costs you have to deal with. There's an insurance policy you have to purchase for the home. There's closing costs on the lender side. There's title company charges. There's an escrow account. So in that case, what the borrower thinks the down payment of that he's prepared for 10%, he's really not prepared for 10%. So it would be my job then to lay out a plan to maybe the answer is we put 5% down, or maybe the answer is we ask for a credit from the seller to pay for some closing costs. There's other alternatives to get to the point where that person can purchase a home if I believe that they're going to be short with cash to close. So so this is a huge the biggest goal or thing that we try to accomplish with the whole pre-approval process is to come up with a plan that we say, okay, here's how I can get you from making an offer to actually closing on the home. And once we have that plan in place, once I review it and I know where I stand, then I'm going to say, okay, here's your pre-approval letter. We're good to go. Here's how we're going to do this. And that's what, that's what Julian as a buyer's agent would look for. That's what a seller's agent or listing agent looks for with a pre-approval. They want to make sure that there is a path to get this done. Credit's been reviewed, the money's there. We know we can get it done. The next thing, let's see what else I have. So I think the best thing is to just kind of to put it in perspective is to think about when you're making an offer, which would be through the realtor, but put yourself in the position of a seller. Say you have a house to sell and you've got 5 people that are trying to buy it. It's not only the price that's the best thing, that would be the decision making on who you sold the home to, because there may be 3 people that are at the same price. What else is there? What other things are tangible or could help to show that buyer is a better buyer, And the pre-approval is one thing. Sometimes I'll get a phone call from the listing agent asking about the buyer, and this is, I can't give personal information out, but they'll kind of check my tone to see how excited I am about this buyer, how strong of a buyer this person is. And they'll ask very pointed questions, and sometimes I can answer them, sometimes I can't. But I know what they're trying to do, and I will, to the best of my ability, say where I think this file stands, But so the pre-approval plays a huge role in that. Moving on to the credit report. I think we talked about a little bit about the debt and some things that are deferred. I didn't touch on this, and that's that credit scores. The second most common myth is that credit scores from Credit Karma or freecreditreport.com, those are not the scores that lenders get. Lenders have a completely different algorithm, a completely different scoring model that they use. It's a good indicator. So when you have a credit report in freecreditreport.com or Credit Karma says your score is 780, I know your score is good. It's probably not 780 though. It's probably 760 or so when I look at it with my scoring model. And likewise, if somebody says my scores are average, they're 620, I probably know that it's under 620, and now we have some work to do, because the 620 is kind of the threshold that you want to be at to be able to do something. Once I see that credit report, I can make suggestions to what needs to be done. Maybe it's something simple: pay down a credit card from $500 balance to 0 or to $10. Maybe there's some collections that need to be dealt with. There's a number of things that could be that I would advise possibly. So, but all the more reason to be prepared. Make that call. Talk to a mortgage lending professional like myself, and figure out what you have to do to be the most prepared to make an offer when that time comes. So when all that is done, you have a pre-approval in your hand, which is a letter, says that you are pre-approved for the purchase of a property to be determined up to X number of dollars. That is the golden ticket that a seller's agent is looking for. They want to know you're pre-approved. So that's absolutely the minimum that you have to do. The next step beyond that, of course, if you had cash, you'd be maybe the strongest buyer. But if you have to get a loan, then very few people are doing this, but it's really effective, and that's to get fully approved. So everything I've been talking about up till now is just dealing with me. The buyer's talking to me, I'm pulling credit, I'm doing things on the computer to determine how strong of a buyer they are. Can I get them through the automated system and approved, and then issuing the letter? Okay. The next step is getting fully approved. And that would be, we call it is a commitment letter, is the actual approval letter that the underwriter presents to the buyer saying that they're fully approved. And that letter will typically go to all parties once a house is gone under contract and somebody goes through the process, they get fully approved. So that's when you have a house selected. I'm talking about getting fully approved before you actually select a house. It's possible to do it. Our program is called Get Committed. We issue commitment letters on a property to be determined. So we haven't selected that. We'll pick a price that we think is on the upper end of where you're trying to be approved. So maybe you're looking at $300,000 homes. So we will try to get an approval for up to 320, something like that. So the borrower in that case will submit an application with us. We will put it through underwriting. Underwriting is they review guidelines. They review all of your documentation, pay stubs, W-2s, bank statements, the whole works. They're going to review this and approve this file as if you actually had a house selected, even though you don't. And they will issue an approval letter subject to the appraisal, subject to the contract, and subject to clear title. That is the most prepared you can be as a buyer that's looking to buy a home and compete with the rest of the world out there, cash and other loans. And I've seen Get Committed loans actually win over cash deals, because the cash buyer will be looking to get a deal. House is listed at 320. The cash buyer says, I'll give you 300 cash. And they think that the cash is worth something. So in the case of the recent buyer that I had, they offered, there was other offers with loans in the 315 range, I believe. They were at 350. They were at 315, same as the other ones. A little bit more than the cash offer, same as the other offers, but the other offers were not fully approved. So my buyer won the property. It was their 6th time in putting in offers to finally get that one approved. And I think we started to do the Get Committed process after the 3rd one fell apart. So we had about 3 more that still didn't work because cash might have won out, but they ended up winning the deal in the end, and they were really happy. So the theme of what I have to say, it's all boring. I know it's mortgage stuff. It's not fun. It's, people like looking at houses and getting excited about, where the couch is going to go and how good the pool looks and all that. So I've got the worst of the jobs here. But if I could, the theme here is be prepared. Be prepared. The time that you spend ahead of time is well worth it to be prepared. And bottom line is when you get the contract signed and you're getting ready to move, you don't want to deal with a loan then anyway. You're worried about packing and everything else. So get it done early. You'll be better for it. You'll be stronger buyer for it. And in the end, it's a way smoother process to do. So anybody has any questions, feel free to reach out to me. I'm happy to discuss. And thanks for your time, everybody here.
Thank you, John. I didn't know about that fully approved process, so that was pretty cool. And
Thanks.
I also like the plan because I'm a planner. But so I just wanted to give each of our speakers one more opportunity to let our attendees know how they can get in touch with you. And then we're going to open up the floor for questions. So, Lucy, would you mind starting again and letting everyone know how they can get in touch with you?
Absolutely. So again, Lucy McGuire, Arrow Title Services. You guys can reach me directly at Lucy. My email is Lucy, Lucie, at arrowtitlesvcs.com. That's my email. My direct line is 772-888-6801. If you have any general questions that you want to call our office about, their phone number is 772-888-9120. We are on YouTube, Facebook, Instagram. Find us, follow us, listen to us if you want to hear about real estate. We try to make it as fun as possible. And yeah, so you can also check out our website and all of our information on there, which is www.arrowtitlesvcs.com. That's how you can reach me. Thank you.
Thanks, Lucy. Julian, how can everyone get in touch with you, please?
So I think I'm on the Young Professionals directory. My cell is also 772-486-6420. I do a little bit on Instagram, Julian Maiucci, realtor. Try to do some stories throughout the day, cool things, funny things, random things I may run into. But yeah, look me up on the YP directory or just reach out to somebody in the group and hopefully they'll have my contact info as well.
Awesome. Thanks, Julian. And John, can you let us know how we can get in touch with you one more time?
Sure. My cell phone is 630-854-7889. And that's my Chicago-based cell phone, but I'm down here in Palm City. And my email address is john, John, Pinkley, P-I-N-K, like the color pink, L-E-Y, at comp, like the word compass, and then mort, M-O-R-T.com, compmort.com.
Perfect. Thanks, guys. All right, we are going to open it up to the our attendees for any questions. I'm going to check on our Facebook live post to see if we've got any questions there also. And then afterwards, please stay on because we're going to do some networking. So let's open it up for anyone for questions. I think you can either type it in the chat or maybe raise your hand. I think Courtney's hosting. She can help me out with that.
Can, and I'll start by asking the question. Do all three of you primarily serve the Treasure Coast? Can you go outside of it? If we have people moving down here, what's your like area that you can cover?
I can answer first. Oh, go ahead, John.
Okay. I cover most of the Southeast. I cover all of Florida, if that's what you're asking. And also I have many other states I cover. I'm licensed in about 16 other states, including California, Arizona, Colorado, Georgia, Texas, a little bit in the Northeast, a good bit of the Midwest as well. So a number of states, but all of Florida, certainly.
So for us, we actually can cover the entire state of Florida. So we can write title insurance for the entire state or do closings. We have a few different ways that we can do closings because we can do remote online notarization, which came into effect like right during COVID, which was perfect timing, which is pretty much a completely virtual closing and such. But we do, the Treasure Coast is our home. We are located in Stuart, Florida. So the Treasure Coast is where we primarily do our business, but we can write and do contracts all throughout Florida.
I cover all of Martin and St. Lucie County. Martin County is where I do most of my business. That's where I network. That's where I live. I do a good chunk in Port St. Lucie, though. Sold a house in Palm Beach last year, so it all just depends on the situation, the circumstance, and if it's a referral. whether they're looking to buy or sell. But all of Martin and St. Lucie County, I'm 100% in.
Awesome. Was there anyone else who had a question in our discussion before I ask my question? Oh, Julian's got a question.
I'll ask a question for John as a refresher. What are you seeing as a minimum credit score right now, and what type of loan is that on?
FHA conventional and begins at 620 for conventional financing. For FHA or VA, you can go as low as 580, although it's painful. So you really want to try to get the client, I really try to get the client, if they're at 580, 590, I'm going to see what it takes to try to get them to 620, because that's really where it becomes not as painful for FHA or VA. So 620 is a magic number. It can go a little lower if we have to.
Awesome. My question is for you, John, also. So with the year of COVID, we've had a lot of people who are switching professions. How does that kind of affect your approval?
So switching professions completely, if it's a salary job, I think most of the time that I would find that I can make a connection between what they were doing and what they are doing now. In other words, if somebody is doing sales, if they went from selling medical equipment to selling I don't know, in the mortgage business, if it wasn't commission, if it's a salary job, then but they're in doing a similar type of work in a different field, that's a bridgeable gap. You can make that connection. If somebody is going from a W-2 situation to being self-employed, that's an issue. We need a 2-year history of doing that self-employment to try to establish a baseline of what the income is. So it really kind of depends, but a lot of times I can make a connection between if it's leaving one W-2 job and moving to another W-2 job. A lot of times you could say that you can make some sort of there's some sort of similarities in the work that they do. It may not be the same product, it may not be the same job, but there's similar skill sets that are used in those 2 different jobs. And that would be part of what my job would be to do, is to make the connection to show the underwriter, look, it's a different field, but they're kind of doing something similar,
So would you say that 2 year is your as a baseline? If you switched careers, you would need?
If it was impossible to, no, I would say if it's impossible to make a connection that their previous job is in some way similar, then I think that I probably could get away with as little as 6 months.
Okay.
At that new job. And now there's other issues that come into play, like a gap. If there's a gap between the one job and the new job, then that throws another wrench into the mix. But generally, if somebody's been employed straight through, went from one job to a different job, and they're doing well, I would say between 6 months and a year, depending on that situation, that would be fine.
Are there any other questions from either our other co-hosts or attendees?
I'd like to throw a question out for John, just with John's getting pummeled with questions. So exciting. So you said you're not exciting, but everybody wants to hear from you, huh? First-time homebuyer programs. Since this is a whole first-time homebuyer type of seminar here, would love to hear what you're seeing out there for that, for everyone who's listening and looking to be a first-time homebuyer this year.
Sure. There's several first-time buyer programs that are trying to figure out how I'm going to phrase this. FHA and conventional financing each have specific first-time buyer programs that are FHA itself is by definition kind of a first-time buyer program. It's more forgiving for people that maybe don't have the greatest credit. It's more forgiving for people that maybe have some, don't have all the money saved that they need. They would need to get a gift from family members. FHA allows for larger gifts. So it's kind of a more forgiving program, and the rate is not impacting the client to go with an FHA loan. The rates are many times even better than conventional. So just by definition, the government trying to be, the government backs FHA loans, so it's kind of their baby. So the government, being a kinder, gentler, organization that wants to help people out, they kind of sponsor FHA, I'll say. And so FHA is kind of a definitely, I would say, the #1 path for first-time buyers. So they allow as little as 3.5% down. Credit scores don't have to be perfect. They're very forgiving for situations. Aside from that, Fannie Mae and Freddie Mac, which are both non-government loan programs, they have their own first-time buyer programs. Not as forgiving, but just as flexible. They go as little as 3% down. And they are very forgiving. We didn't talk about mortgage insurance, but private mortgage insurance is at a reduced rate for the buyer. So they give the first-time buyer a break. You have to qualify by not having owned a home before in the last 3 years, and also potentially there's an income bracket that you need to be in, not above a certain level. So somebody that's making $150,000 a year is not going to get this program because they're making too much money to qualify for it. So there are other programs that are maybe state offered where the perception is that there's free money for a first-time buyer, like a grant program and that sort of thing. These programs are really good if you don't have the money. If you have the money, then the grant programs are probably not the best. So in other words, if you don't have the money and your only option is a grant program, it's a pretty good option, but those grant programs, typically the rates are going to be a little bit higher and the fees will be a little bit higher. So for somebody that has saved some money, the majority of people that I talk to that are first-time buyers, they have a little bit of money saved, or they can get a little bit of money. And usually we end up going not with a grant program, but actually go with a regular FHA or conventional loan and find ways to have the closing costs paid for. And they end up being a little better off most times. So there's plenty out there, but it's so specific with the individual buyer. You just, kind of have to take it all in and then figure out what is best for them.
Absolutely. And can I add one thing in there, Katie? And not necessarily about first-time home buyers, but just it is for first-time home buyers. I just want to say to anybody out there who is like watching this, rewatching this, whatever it might be, that I feel like first-time home buyers are kind of getting the brunt of this market that we're in right now. It is a very competitive market, and I think a lot of people are getting discouraged by that and feeling like they have to wait. Just start the conversation with a local professional. The local professionals who are on here, whether it be me, Julian, John, just start the conversation and see if it's even a possibility. Because I think a lot of people are afraid to start that conversation because they're like, well, I'm not completely ready, or I'm not. You don't have to be 100% ready. We'll help you and guide you to that and say, you're not ready yet, but this is the steps that you need to take to get there. And I know a lot of people are just afraid to have that conversation. The conversation's free. It's not going to cost you any money. So we're here for you. And I'm always available, but I know Julian and John are as well. And just a wealth of information. Just don't be afraid to have the conversation. That's what I wanted to say.
Awesome. I like that, Lucy. Thanks a lot. Any more questions? Nope, we're all good. Okay, I wanted to briefly go over our events that are coming up on the calendar, and then we'll get started with our fun networking time. So our next event is going to be on Thursday, April 29th. It is our after hours at 5:30 to 7, and this will be at Ooh La La over by the airport. By the airport and the fairgrounds. there is a sponsorship opportunity for that. So if you want to chat to our attendees, please let me know. And it is filling up. Those are limited. So I would suggest getting your ticket ASAP because that has been selling out at least the last 2 times. Then on May 5th, it's a Wednesday in the morning, we are having our Coffee and Connect. This time it will be at the YMCA, and this is sponsored by the Lotus Room. This is going to be a fun one. We are going to have the mayor of the city of Stewart, and we are going to have the chairwoman from the Martin County joining us. So you can ask them all kinds of questions that you would like about our community. And then we've also scheduled our May after hours. That is again going to be on a Thursday, May 27th. This will be from 5:30 to 7. And this will be at the Hope Health and Wellness, which is located on Monterey. Again, I recommend signing up early because these are selling out. And there is a sponsorship opportunity for that one too. So let me know if that's what you would like. And my last piece of official business is that we are looking for committee members. So if you ever wanted to get more involved with young professionals, if you kind of saw yourself sitting on the board, or you just want to help along, get to know some of our other members, maybe you want to start networking with our members, the membership committee is great. I know they're looking for someone, and we're always looking for people on the outreach committee to plan events, communications, all kinds of committees. So please, if you have anything that you wanted to try to get involved with us or an idea, please share it. You can contact us through our website. Our email is info@ypmc.org. And that's it. So we are going to turn off the Facebook Live here at the moment, and we are going to open it up for chatting amongst each other and networking. So
Everyone say bye, Facebook. Bye.
Bye, Facebook.